Hey, welcome back. CRAIGO here. I hope you're all well. We are in tough times here in the UK. The recession is probably well in full swing. At the time of filming this video, just yesterday, the Bank of England increased their interest rates to 4%. It's more important than ever with rising energy bills, rising mortgage rates, that we aim to strengthen our personal finance. And I'm going to be giving you, from an accountant's perspective, my top 10 tips for strengthening your personal finance. Please note that none of the 10 tips are financial advice. They are purely my opinion for entertainment purposes. But first of all, in at number 1, we have got to earn more money. If you want to strengthen your finances, go and earn more money. Whether that's get a promotion at work, whether that's create a side hustle, exactly like I have done here with this business. Even do something as simple as product research or surveys online, which you can earn a decent amount of money. Definitely, if you're wanting to improve your personal finances, then do what you can to improve on the income that you have. In at number 2, I have to pay off debts. Those debts are crippling your bottom line. Every month that you have a further expense for a purchase that you committed to months and months ago is impacting your ability to save or even invest your money. Chances are you will be paying an interest rate on this debt as well, meaning the cost to service that debt far greater than the benefit of paying for that asset. If these debts and these loans are costing you more than the value of those debts and loans, then I'm afraid it is time for you to prioritize those and start to pay them off. In at number 3, I have to build an emergency fund. I cannot stress how important it is that every single one of us has an emergency fund. This amount of an emergency fund will depend on your lifestyle. However, it is funds that are there for a rainy day. Let's say the boiler broke in your house and you had to spend £2,000 to £3,000 on a boiler. Well, I'm afraid you can't live without it because you need it to heat your home. Therefore, make sure that you have prioritized and saved money so that you have an everyday rainy day fund for those unexpected life events, which I can assure you will happen time and time again. In at number 4, open a cash ISA. Bank of England have increased their interest rates to 4%, meaning that one of the only benefits of them doing that is cash ISAs now have an even better rate of return. I was only having a discussion with my parents today about how they've just opened a 4% Barclays ISA, which, if you compare to the interest rates that we had when the interest rates were low, my savings account, for example, my cash ISA had a 0.1% interest rate, then you would be silly not to leverage these new interest rates. Whatever you do for that emergency fund, don't just leave it in a 0% bank account. Go and put it in somewhere where that money is going to work for you and that money is going to grow over time. And in number 5, one of my favorites on this list, go and open a stocks and shares ISA. The benefit of an ISA is that the earnings are tax-free. You can invest up to £20,000 a year across your ISAs, whether that be cash and stocks and shares ISAs, and earn a return on those without paying a single penny to the tax man. A stocks and shares ISA is a long-term play here. I invest a fixed amount of money every month into the stocks and shares ISA out of my salary so that I can continue to build my wealth over time. And as the stock market grows, so does my investment. There is a proven stat out there based on historical trends of the stock market that if you hold your money in a stocks and shares fund such as the S&P 500, then if you hold it for a minimum of a 10-year period, then you will never have lost a single penny. In at number 6, invest in assets, not expenses. Something that I've done, look at my expenses, look at my bad habits, and understand how I can stop them. So for example, I frequently go out and buy a coffee at £3 to £4 a time. And look, I know this is that obvious example every single time. However, by spending £150 on a coffee machine, £20 to £30 on a Chili's coffee cup, for a grand total of £180, I've got the ability to make coffee and take the coffee out of the home with me. After about 45 coffees, you will have made your money back. You have invested in an asset with a cost avoidance element, which over time will save you money. In at number 7, stop buying convenience. Convenience comes with a convenience tax. Look, I've made that up but you know exactly what I mean. If you buy something that is already made, they're going to charge a premium because that is readily available to you. Convenience comes with a premium. However, convenience doesn't offer you something that you can't do yourself. So stop buying convenience and put the effort into doing it yourself. And I can assure you will save a heck of a lot of money. Number 8, and that is to review your bills and shop around for cheaper deals. Whether that means switching customer, whether that means phoning up your current supplier and saying, look, I found a better deal elsewhere, match it. Whatever that means, go and do it. Within bills, I also categorize subscriptions within this point as well. Review what you're spending. Ask yourself the question, can I cut this expense, this subscription, or can I find it cheaper elsewhere? Because I'm sure that a simple review of your bank statement will show a lot of opportunity for you to cut on your subscription expenses and your bills. In at number 9, spend your money on the things that you enjoy. Don't spend your money on the things that you don't enjoy because you'll get no personal satisfaction out of it. I therefore save my disposable income to spend on doing things, going out, going on holiday, day trips, going for meals out with my fiance, with my friends, going for a few beers with my friends, whatever it is that makes you happy, prioritize that expenditure. That expenditure that you don't enjoy or you get no enjoyment out of is adding no value to your life. And in at number 10, my final one, eliminate non-value add expenses. If they don't do anything for you, if you don't get any enjoyment out of them, if they don't provide you with an asset, it's just an expense because, well, felt right at the time. You saw something you liked and you bought it. Well, stop it. Don't do it. There's no need. As I say, spend your money on assets, not expenses. Spend your money on things you enjoy, not things you don't enjoy. And I can assure you, if you do that, you will make your financial position far, far stronger. Now, they are my top 10 tips for how you can improve the strength of your personal financial position. I hope you enjoyed them. I'd love to hear down below your favorite tip in the comment section. But that is all from me today, and I look forward to seeing you in the next one. But until then, CRAIGO over and out. Goodbye.